If you are trying to add $1 million of liability protection, you will usually face two competing options: raise your total liability limits or buy a personal umbrella policy that sits on top of your tow and homeowners or renters coverage. This narration will walk through both routes with a practical cost breakdown, clear assumptions, and real-world decision rules so you can spend the least money for the most protection. First, define the problem in plain terms. Liability coverage pays when you are legally responsible for injuries or property damage to other people. A serious crash can create medical bills, lost wages, legal fees, and long-term care costs that can exceed standard limits quickly. A single lawsuit can climb beyond $500,000, and in a bad outcome it can reach seven figures. You want an extra $1 million in protection above what you already carry, and you want to buy it in the most cost-effective way. Now, understand what each tool actually buys. Higher tow limits increase the amount your tow policy will pay for injuries and property damage you caused while driving. Umbrella insurance is a separate liability policy that typically adds $1 million or more above your underlying limits, and it often covers you beyond driving, like accidents on your property, certain personal injury claims, and some incidents involving dependents. Umbrella is not the same as comprehensive or collision. It is not for your car. It is for claims from other people against you. Here is the core idea. If you are buying an extra $1 million of liability protection, umbrella insurance is usually cheaper per dollar of coverage than raising tow limits alone, especially once you move beyond common limit tiers. But the cheapest path depends on where your current limits start: your insurer, your state, your driving record, your household drivers, your home ownership status, your assets, your risk profile, and whether you bundle policies. Let us set a baseline so the numbers make sense. Assume you currently carry bodily injury liability of $250,000 per person and $500,000 per accident, and property damage liability of $100,000. That is written as $250, $500, $100. In many households, that is a common higher limit package, but it is still not $1 million. Now you want to add $1 million of protection. Option 1. Raise tow limits. You might raise from $250, $500, $100 to $500, $500, $250, or to $500, $1 million, or to $1 million, $1 million, depending on what your insurer sells. Some carriers do not offer $1 million on the tow policy directly, or they price it aggressively. Even when they do offer it, the marginal cost for each extra dollar of limit can rise sharply after certain thresholds. Option 2. Buy a $1 million umbrella. To qualify, the carrier will require minimum underlying limits on tow and homeowners or renters. A very common requirement is at least $250, $500 on a tow, and at least $300,000 or more of personal liability on the homeowner's policy, or a similar renter's liability level. If you do not make those minimums, you must raise your base policies first. Then you can add the umbrella. This matters because the umbrella cost is not the whole cost. The true cost is umbrella premium plus any required increases in the underlying limits. So we are going to do cost breakdowns in 3 layers. Layer 1 is what you pay to raise tow limits. Layer 2 is what you pay to meet umbrella underlying requirements, if you are currently below them. Layer 3 is the umbrella premium itself. Then we compare total annual cost for an extra $1 million of protection. Start with the clean numerical example. Example household, 2 drivers, mid-30s, clean record. Average mileage, 1 financed car, 1 older car, Suburban Zip, homeowners policy in place, currently carrying 100, 300, 100 on a tow, and 100,000 personal liability on homeowners. This household is underinsured for umbrella eligibility. They want 1 million more protection. Half of one, raise tow only to try to get 1 million on the tow policy. Suppose the carrier offers these tiers: 100, 300, 100, 250, 500, 100, 500, 500, 250, 1 million, 1 million, 500. Your carrier might be different, but the logic holds. Assume the current tow premium is 1,800 per year, raising from 100, 300, 100 to 255. 100 might add about 100 to 300 per year depending on state and risk. We will use 200. Raising from 250, 500, 100 to 505. 250 might add another 150. We will use 150. Raising from 500, 250 to 1 million, 500 might add another 300 to 800. We will use 500. Total increase to reach 1 million, 500 is about 850 per year in this example. That is your cost to add roughly 750,000 to 900,000 of extra protection depending on starting point. If you already had 250,500, the incremental cost might be around 650 in this example. This is one route. Now path 2, qualify for umbrella and buy it. From the same starting point, the umbrella carrier requires 250,500 on tow and 300,000 personal liability on homeowners. So first raise tow from 100, 300, 100 to 250,500, 100. That cost we assumed is 200 per year. Then raise homeowners liability from 100,000 to 300,000. That increase is often modest. In many markets it can be $10 to $50 per year. We will use 30. Now you are eligible. Then buy 1 million umbrella. Umbrella pricing varies widely, but for a low-risk household it can be about 150 to 350 per year. For 1 million, we will use 250. So total incremental cost is 200 plus 30 plus 250. That equals 480 per year. That is the true cost to add 1 million of umbrella coverage. Plus, you also end up with higher base limits. Compare 408 to 850. Umbrella path wins by 370 per year in this example. Now let us do example household B. Same general household.